Hi, today I want to talk about share sales versus asset sales. This is quite a basic concept, but it can often cause confusion. And it's just one of those things where it will kind of get your head around it and it's a lot easier for you to work out what's going on going forward. So when you have a limited company, you have a choice of two different types of sales when you go to sell that business. You can do what's called a share sale, or you can do what's called an asset sale. Now, a common misconception when we talk about share sales is that people think they're only buying a share of the business. Now, actually, these are more commonly referred to as partnership sales. Because you use that term share, it sounds like, well, how much am I buying? 50%? No. A share sale of a limited company is still an entire company sale, but it is exactly that. It's the entire company. So what you have is you have the limited company and you have everything that limited company owns. And then as a share sale, what happens is your seller basically sells the entire thing, including the company itself, over to the buyer. Now, these are quite common in nurseries because actually for a lot of nursery owners, they run as a limited company, their OFSTED is in the limited company name, and as a result it's an easier sale in general to just transfer the whole thing across. It also, to be honest, is more tax efficient for your seller. So in most cases, as a buyer, if someone says they want a share sale, if you then say, well, no, I want an asset sale, you're actually making yourself less attractive as a buyer because actually it's going to cost them more as a seller to sell the business than if they did it as a share sale. An asset sale is essentially where you have a limited company, again, the whole thing and all the things it owns, but what you're selling is just the things it owns. So the seller is maintaining the shell of the company and in all likelihood filling it with money, hopefully, because they've sold everything it owns. The problem with that is that they then have to find the best way to get the money back out of the company in the most tax efficient manner, because otherwise, actually, you know what, they're just going to end up paying more tax on it, which is why an asset sale is less efficient. Sales that have to be asset sales are sole traders or partnerships that aren't run within a limited company. So if you have someone who's running in their own name or running as a partnership under their own name, trading as, then actually that would be an asset sale. Now, actually in reality, you know, it doesn't matter either way. Both sales are relatively easy and have strict processes they follow to go through. But generally, due diligence on a limited company sale, a share sale, is deeper than due diligence on an asset sale because the buyer is buying the entire history of the limited company. So as a seller, you have to be prepared for that because you're going to be asked for a lot more information. With an asset sale, the buyer has to be aware that the OFSTED doesn't transfer. So part of the transaction is a new OFSTED registration or, you know, adding to an existing registration with a new location. So it can make for a slightly longer transaction if it is that has to come into play. But generally, either way is acceptable. A share sale basically means you're buying the entire limited company, all the shares of it. You're not just buying a portion, you're not entering into partnership, you're buying the whole thing, including the name and the limited company itself. An asset sale means essentially you're buying what that limited company owns, or you're buying a sole trader or partnership. But either way, perfectly normal transaction, very, very easy to do, and we'll work with your solicitor and your broker to get you through it in one piece. I hope you found that useful. If you have any questions, please drop them below and I'll see you again soon.